Chasers, welcome back to another episode of the Chasers channel, the podcast where we dive deep into the world of business and finance and bring you expert advice to help you make informed decisions to bring you closer to achieving the dreams you are chasing. Today's episode is about whether getting a pre-approval for your loan before you make an offer is worthwhile. The key to most property transactions comes down to a buyer's ability to secure finance. But over the past 12 months, as interest rates have risen against a backdrop of higher property prices, obtaining finance hasn't always been easy. The first step most would-be buyers take is speaking to a mortgage broker and getting a pre-approval in place. However, are they really worth the trouble? I'm Chris Becks, your host, a business and financial advisor with over 40 years experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And as this is a lending topic, as a credit representative of Outsource Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. Chris Becks is a director of CBEX Financial Solutions and a credit representative of Outsource Financial Limited, license number 384324, and is authorized to provide personal credit advice.
Now that is done, let's dive into this episode. Pre-approvals for loans have become increasingly popular in recent years, but there seems to be some confusion around their value. To start off, let's explore what a pre-approval is and how it differs from a pre-qualification. A pre-approval is a process in which a lender evaluates your credit worthiness and determines the maximum loan amount they're willing to lend you based on your financial information. It involves a thorough analysis of your income, assets, and credit history. A pre-approval is simply a lender indicating they'd be willing to loan a certain amount to a potential buyer based on a preliminary assessment of the buyer's financial circumstances. This can provide a degree of certainty and a clear budget guideline for buyers before they start house hunting. On the other hand, a pre-qualification is a preliminary assessment that provides an estimate of the loan amount you may qualify for based on self-reported information. While pre-qualifications can be helpful to get an initial idea, pre-approvals carry more weight as they involve a deeper review of your financial situation. However, it's important to remember that a pre-approval is not a guaranteed loan. It's a conditional offer subject to final approval, which occurs once a buyer chooses a property. The final approval is contingent on the lender's valuation of the property and any changes in the buyer's financial circumstances. Why would someone consider getting pre-approved before making an offer to buy a property then? There are several benefits to obtaining a pre-approval. First and foremost, it gives you a clear understanding of your budget and how much you can afford in repayments, along with a buffer, in case of those interest rate increases we have seen of late. This is more important than ever in a rising interest rate environment, where borrowing capacity for most people is a lot lower than what it was 12 months ago. You are then able to narrow down your options and avoid wasting time looking at properties that are outside your price range. Secondly, a pre-approval shows sellers that you're a serious buyer and have taken the necessary steps to secure finance. It can give you a competitive edge in a competitive real estate market if you are ready to buy. Thirdly, the process of getting a pre-approval can also help identify any issues in your credit history, that may hinder your loan application. It allows you time to rectify those issues before you find your dream property. So pre-approvals sound like a good idea, but are there any downsides or potential risks? While pre-approvals are generally beneficial, there are a few things to keep in mind. One potential downside is that pre-approvals have an expiration date. The validity period varies among lenders, but typically ranges from 60 to 90 days. If you don't find a suitable property within that time frame, you may need to go through that process all over again. Another risk is that pre-approvals are subject to change based on fluctuations in interest rates, changes in your financial situation, or other factors. It's important, therefore, to stay in touch with your lender and keep them updated on any changes that may impact your pre-approval. The issue many borrowers have is understanding that pre-approvals are conditional. There have been instances where pre-approved buyers have successfully bid at auctions only to miss out when the lender's final valuation of the property falls short of the purchase price, or their financial situation changes, resulting in the loan being denied. This can also happen in a market where prices are rising rapidly. A lender's valuation may not keep pace with the latest selling prices, leading to a shortfall between the loan amount and the property's purchase price. So how time-consuming are pre-approvals, and do they involve a lot of paperwork? Well, it's true that pre-approval processes requires gathering and submitting various documents, such as payslips, bank statements and tax returns. However, it's important to remember that this information is essential for lenders to accurately assess your financial situation. Many lenders now offer online pre-approval applications, which can streamline the process and make it more convenient. Gathering the required documents up front and being organised can also help speed up the process. It's a small investment of time that can potentially save you a lot of hassle down the road. While pre-approvals require some effort, they can be a valuable tool when purchasing a home. They provide a clear understanding of your budget, increase your credibility as a buyer, and can potentially give you a competitive advantage. By taking the time to get pre-approved, you're putting yourself in a stronger position when it comes to making an offer on a property. If you would like to simplify your mortgage pre-approval process, reach out to our mortgage broker at CBEX Financial Solutions on 03 55 61 2643. Thank you for listening. I'm Chris Bex, and I look forward to presenting another episode to you real soon. Have a great day.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.